Hello, everybody. Hope you guys had a fantastic Thanksgiving. I know I did. So, I checked my portfolio a few times during Thanksgiving, and thanks to one stock in particular, I had a very good time with my portfolio. So, we can see now we're at 235,000, and yeah, I did cut down, like I said I would, on all of my covered call ETFs. So, no more FEPI, no more AIPI. No more JEPI, no more JEPQ. I put all of those just into pure equity stocks and ETFs. So we can see that my number one position, HITI, did very, very well over the last week. And it is now up over 26%. And honestly, it doesn't really impress me that much, this number. Because for this company, I'm looking for a real multi-bagger gain. This is like double, triple your money kind of stock. So I am definitely not surprised, and I wouldn't mind any pullbacks, but this is definitely good to see. It's definitely nice to see. I think this stock is getting a lot more attention online with a bunch of different investors. They're starting to see that this is a very quality company in a distressed industry. So I'm personally very happy with the share in my company. You can see it's my number one holding now. I really wish it would have been SoFi or Palantir, but I just did not have the conviction to put in so much money into these companies at the time. And now I'm able to do so with HITI. And I believe I got in at a decent price at a good time. And it should continue to perform very well within the next decade plus. So most of the time when I put money into these really high conviction stocks that are in the top 5 position in my portfolio, I'm not really looking for, oh, this is the best time to get in, I'm going to put in a bunch of my money now, or, oh, I think it's going to drop in the next few months, I'm going to wait and put money in 2-3 months. Not really. With these companies that I have high conviction in for massive growth potential in the next decade plus, my mindset is, this is a quality company, I need to increase my share in it. So overall, it doesn't matter what the price is within the next few years. I will just continue to increase my share in this company and hold for the foreseeable future. So now in my portfolio, the only thing that really pays me is my cash position, which I have in SGOV, and it is the majority of, well, it's the largest position in my portfolio, and I do that to have some risk mitigated because I am very extended into growth companies now for my personal risk tolerance. And SCHD is just something that I've increased, over time. It's a very good ETF. I've got some more TLT just in case yields go down and we get resurgence in these bond prices. And it's just a good hedge to have in my portfolio. I personally think that the recent small cap and a little bit so of large cap growth is not really sustainable for the short term. I think that it's starting to cool off. We're starting to see that. It's not really a violent move upwards every single day anymore. It's more just a few stocks here, a few stocks there. Some of them are dipping. And I think that there will be buying opportunities in the future, which are really good buying opportunities. But if you're still looking to get into these companies, I think that it's starting to look a little frothy in the markets. So I personally wouldn't go too much into buying. I'm just going to wait it out with my cash and the positions that I already have. And like I've said before in previous videos, I'm not looking to sell. So it doesn't matter if they go up another 20-30%. I'm just holding because I'm not trying to time the market with these quality companies. HITI recently is really making its move into the e-commerce market. So this is a really good thing to see. Their core business is their brick and mortar stores, Canna Cabana, but just having this e-commerce side potentially grow alongside with that is just going to be so good for this company. And it's going to create a lot more opportunities for them to expand globally, not just into Canada. The next really large news that could move SoFi stock is if they sign on a top 5 US bank for their Galileo service. That'd be huge. But other than that, they're just going to keep doing well, keep growing, keep adding members, and yeah. Palantir just continues to surprise me. I mean, on a day when small caps are just flat or slightly down, it's up almost 7%. It's surpassed $70. It's up so much, and I think that it's warranted for sure. And I'm personally happy with the share I have in this company. I will definitely look to add more in the future, especially if there is a pullback or just some consolidation. So one company that I did go over recently before Thanksgiving was TransMedics Group. And what a move it made today. I mean, down 16% is pretty crazy. We can see that it's not been doing so well recently, and it might be a good opportunity for long-term investors because a lot of what they reacted to the market is that its growth has slowed a little bit, and that's only recently. So they haven't really expanded globally very much yet, and there's such a large market for these quality transplanted organs and the reliability of their service to save lives, basically. So there's a lot of potential with this company. If we see under 70, I think it's a fantastic buying opportunity for them. I need to keep doing research to see if it's worth increasing my position size in this company. But just from looking at the numbers and looking at what they could possibly achieve in the future, it's a very interesting company and one that's worth watching. One really quiet little stock that I have owned is PayPal. And the thing with PayPal is it's really popular on YouTube right now. It's really popular on a bunch of social medias, and it's very much a comeback story. And I think that things are looking good for PayPal. According to news reports, this recent Thanksgiving, Black Friday, this whole holiday season should be a pretty good holiday season for shopping, and consumers have been pretty strong in this period. And PayPal is looking like a really good consolidated stock in this area. Two stocks that I did add a little bit more into is Tesla and AMD. Tesla is more of just a bet on their future products. I think that if they're able to improve on their robotics and make that actually work, that could scale so well. But that is a lot to hope for. The next thing is, of course, full self-driving. If full self-driving 13, 14, 15 is all it's chalked up to be, then it's gonna pretty much change the world. So it's definitely a stock that I don't want to not be in, and it's something that I'm willing to add a little bit every now and then. And it's certainly performed really well within the past few weeks, especially with the new presidential administration coming up. But we'll just have to see if they're able to break out of this $300 range. AMD is just a quality company that I think could really benefit in the next 5 years. I think that within the next 5-10 years, we could see it really take up more market share. AMD can pick up where NVIDIA falls short, and they also do very well with their CPUs, which they really surpassed Intel in. I think the next generation of consoles, especially the PlayStation 6, is going to have more demand than this previous one. I think the PlayStation 5 just had a really horrible launch, just really soft, and there were so many issues with supply chains, and it was not a good time for them to release the PlayStation 5. And there were so many issues like scalpers, not enough inventory. So I think that the next console generation is really going to learn from the mistakes of this past one, and hopefully they're able to establish a more optimized supply chain. So AMD has definitely a lot of growth potential, especially their data centers, which is their growth right now and in the near-term future. I did increase my position in Rivian a little bit, and this is a stock that I'm willing to lose all my money on because it's either that they do really well and they 10x from here, or they're going to zero. But in the case of Rivian, there's so much love for their cars, their EVs. Their consumers really love the product. Their SUV, their pickup truck, when I see it on the street, it looks really nice. And when you read online about the reviews and just overall chatter about this company and the cars that they create, people really love this company, and it's much more passion for this company than I've seen for other EV companies that have went under. And it's a really tough industry. I've said before that I don't really like owning automakers. I would never buy like a Ford or GM, those kind of companies. I think that with Rivian, if in the next 2, 3, maybe even 4 years, they're able to break even with their vehicles that they sell, they're able to taste a little bit of profitability, then the stock could do extremely well. If they can optimize every little thing and try to get their company to be in a better position to grow and to be profitable, then it can be really, really good for this company. They have the R2, R3 coming up, and those are going to be so huge because the SUV and pickup truck that they have now is pretty expensive. Only certain consumers will want these really huge vehicles. And once they have the R2 and R3, which are medium and smaller, then this is going to be such a larger audience that they're able to take over. And not even that, but the price point is going to be so much better. They're going to be much cheaper. If they can do like $40,000 SUV car and get that out to many people, optimize, and be maybe even a little profitable with them, then this company is going to do so well in the future. Because in most industries, there are multiple winners. When you look at energy drinks, there's Red Bull, there's Monster, maybe Celsius. And with EVs, there's going to be Tesla, there's going to be some legacy car makers that transition to EVs and they do well. And there might be Rivian in the end. So we really don't know. And looking at the chart here, it seems like it's found a bottom here. It seems like it has, but I really wouldn't be surprised if it does continue going down. I mean, it looks the same as it does back here. It looks like it's found a bottom and it just continues going back down. It's really hard to predict with a company like this one with no real profitability yet. There's no good projections to look at in terms of how to value it. So all you can do is just continue watching the company, continue seeing how they're executing, and just see if there's any path to profitability, and if the consumer still likes their product, which in this case they do. For the time being, I'm really done buying stocks. I think I'm just going to hold my cash position unless I see some really good deals in the market of quality companies that I want to buy into. Nothing like HITI, SoFi, Palantir. I mean, these are just on another level in terms of the companies that I want to own. But if I do see some deals in quality companies, I will add. But for now, I'm just maintaining my cash position, just getting that interest, waiting things out. So I did open a Fidelity account recently, and the reason is I used to do cash secured puts on Robinhood, and that did really well. I did it mostly on asts on the way up, and that was very, very profitable. But I heard that on Fidelity, you can take the collateral cash and basically you get interest on that. You basically get the money market fund that Fidelity uses, which is currently 4.7%, I think, or no, it's like 4.2%. And essentially that collateral is still making interest versus on Robinhood, it's not. And yeah, I think that sounds like something I'd want to do with this cash, with some of this cash position here on my main portfolio. I think I might start doing that in the future. That'll be probably like a second portfolio that I'll split using this SGOV cash. And it wouldn't be all of it. I think I'd put like 50 to 60K into it. But for the time being, I'm just going to be watching the markets, really keeping an eye on things and watching the companies that I'm highly invested in. But yeah, overall, really great Thanksgiving, and came back to my portfolio being like almost 10K above where it was before. And yeah, thank you so much for watching. Please like and subscribe if you haven't already, and I'll see you guys next time. Bye.